Geopolitical conflict between Iran and Israel is shaking up the global markets. For Forex traders, this kind of uncertainty creates both risk and opportunity. Here's what you need to keep in mind right now. First, safe havens matter. In times of conflict, investors pull back from risk and move their money into currencies they trust. The US dollar, Japanese yen, and Swiss franc typically benefit. But among them, the yen often performs best when yields drop and fear rises. It's a reliable hedge when things escalate. Next, keep your eyes on oil. Middle East tensions almost always push oil prices higher. That feeds into inflation, especially for countries that import energy. If you're trading currencies like the Indian rupee, Turkish lira, or South African rand, be cautious. Higher oil prices hurt them and often lead to depreciation. On the other hand, commodity-linked currencies like the Canadian dollar or Australian dollar can see short-term support if oil and gold surge. But don't mistake that for a risk-free rally. If the conflict leads to a global slowdown, those currencies could fall too. Central banks are now stuck in a tough spot. Oil-driven inflation could delay interest rate cuts. For the Federal Reserve, that may mean keeping rates higher for longer. That supports the dollar in the short term, but it could also weigh on growth. The longer inflation stays elevated, the more pressure there will be on both central banks and currencies. And remember, volatility is going to spike. Expect sharp moves and unpredictable swings. Trade smaller, use tighter stops, and avoid over-leveraging. This is a time to stay nimble and be patient. Don't chase headlines. Focus on the bigger picture. Follow oil prices, watch central bank signals, and monitor investor sentiment. Geopolitical risk is complex, but if you stay disciplined and focus on fundamentals, you'll find opportunity even in uncertain times. Stay sharp, trade smart,